The carnage in the crypto world continued today with Bitcoin hitting its lowest level since December 2020. So what does the plunge mean for companies like MicroStrategy, which are so highly levered to these assets? For more, let's bring in CoinShares Chief Strategy Officer Meltem Demirors. Meltem, great to have you with us. You know, at some point in time, there was talk about more and more companies on the S&P 500 potentially putting Bitcoin on the balance sheet, and that seems like that is done. I mean, that's just a pipe dream at this point. What's the ripple effect in your view of this? What kind of ripple effects will we see with Bitcoin being where it is now?
Absolutely. Look, I think we're operating in a really new environment. 50% of the S&P 500 is down over 50% since the start of the year. Investors are de-risking across the board, while the fundamentals of many businesses like Coinbase and our business CoinShares are quite sound. Price to earnings ratios are very healthy. I think investors generally are very wary of risk. They're de-risking across their portfolio. They're trying to stem the bleeding. And so we're seeing a sell-off. We're seeing concerns around this downturn. I think many investors do use crypto public companies as a proxy for exposure to Bitcoin, ETH, and the crypto market overall. So we generally do see high correlations between crypto related equities and crypto markets. That being said, I think many of the concerns around MicroStrategy and the Bitcoin exposure on its balance sheet are somewhat overblown. They do have just a very minimal amount of leverage. I think there's been extensive coverage on the topic. But I do think, as we've always highlighted, Bitcoin and crypto assets have historically been volatile. We're seeing higher highs, also higher lows. But these assets, you know, they're not cash. They're not cash equivalents. And in the current environment, I think the market is pricing a preference for free cash flow and cash on balance sheet.
Hey, Meltem, it's Dan. You and I were talking earlier in the week, and you were mentioning, despite some of the weakness that we've seen in some of the major coins, and Bitcoin obviously, and ETH in particular here, you're seeing some data where you're seeing institutional inflows into other products here. Talk to us a little bit about that, because I know that's a really important pillar of the bull case here.
Absolutely. Look, I think it's always really interesting. Obviously, the narrative right now, we've seen crypto market cap decline significantly by about a third over the last week or so. So clearly there's concern. We've seen events like this before, albeit not at this rapid pace. The volatility and the velocity, I think, in all markets is feeling like it's increased quite a bit. But one of the interesting things we track is, since we're in the business of asset management, we track product flows. We issue a weekly fund flows report. And interestingly, last week, even though Bitcoin saw 15% price decline, there were net inflows into Bitcoin products, around $45 million of net inflows, and global AUM of Bitcoin products at the end of last week still stood at 30 billion, at around 50 billion across all crypto products. So again, I think investors are sitting by opportunistically. There are investors who are looking to add crypto exposure. You know, 1 to 4% allocation is historically what we've advised with quarterly rebalancing. So I do think there are buyers who are looking to add. Now, will those positions be in massive size? Possibly not. But I do think there are buyers who are looking at this opportunity as an opportunity to accumulate in DCA, or dollar cost average, in to position, particularly in assets like Bitcoin, Ether, and others.
Meltem, good to see you. Thank you for your time.
Of course.
Meltem Demirors of CoinShares. Guy, you've talked to Michael Saylor, the CEO of MicroStrategy, many times, and so I'm wondering what your take is on this exposure now that it's to the down, now that Bitcoin's on the downside.
I don't want to speak for Michael. I'll say this, knowing him, I don't think he's going to waver from his view. My sense is, you know, a week or two from now, you'll find that MicroStrategy's probably continued to add Bitcoin to their balance sheet. You know, I don't think again, I'm not speaking for him, just in my, you know, knowing, being familiar, I don't think he's focused on the $10,000, $15,000 moves. He's obviously in this for not the next 5 minutes, for the next 5 years. With that said, quickly about Bitcoin, I tweeted it earlier. I don't think it's coincidence that Bitcoin topped out around the same time this Fed became responsible late in November, because I think Bitcoin was born out of the fact that central banks are running amok, and now that they're trying to get their act together, Bitcoin and crypto has been cut in half. The trigger for Bitcoin to go higher, again, my opinion, if for whatever reason this Fed blinks, be it market reasons or otherwise, I think Bitcoin goes parabolically higher.
Well, that's, Dan, why you bought a lot of crypto today. Not a lot, but you bought crypto today because of the high correlation. The correlation between Bitcoin and the NASDAQ is at an all-time high.
Yeah.
So that's the same bet.
So when I think of some of these smart contracts like ETH and Solana, I think of them as like maybe a high growth, high valuation NASDAQ sort of stock that there's like ecosystems being built around them. That's how I think about it from an allocation standpoint. And I just think they've come in so far, and I haven't bought any in a very long time. I just think that, again, I think Meltem just said it, dollar cost averaging. None of us are going to know where that bottom is. So you start small and you kind of work your way into it, and you have that thesis and you stick with it.
Yeah. Karen, you adding to your holdings in the top drawer that you've got in Bitcoin?
In the drawer that, no, definitely not. Leave it there, see what happens.
And Tim?
Look, it might be more the middle drawer for me. I think you've got a case where this is the kind of pullback that every institution who wanted to own this 6, 9, and 12 months ago has been waiting for. I do think institutional adoption is certainly coming more than we've actually seen it leave, and I think you actually have a case where the regulators finally have a lot more to go. I also think the biggest banks in the world, and I think the Federal Reserve and central banks globally have adopted digital currencies and crypto and blockchain. That's only good for the asset class. It's just a terrible time for risk.